Then we'll follow up with a Q. Then we'll follow up with a Q&A, then announcement and closing. So before we start, we would like to know where you're joining us from. Would like to know where you're connecting us from. I am from Nairobi, Kenya. Would like to know where you are, and if you're in North Africa, if you are out of Africa, I would like to know. And please feel free to interact in the chat, and also you can share your LinkedIn profile so that we can connect and further the conversation. So I will call on Fadila to give us the statistics of these of angel exits as of 2024. At ABAN, this year's theme is consolidating angel investments across Africa, and we have had this masterclass series. We started with cross-border investment, then we went into navigating angel investment landscape in Africa, and today we are now talking about exits, something that is a hot topic in the ecosystem right now. Fadila, please take it away.
Thank you so much, June. And it's a pleasure to be once again connected with all of you today to talk about exit, and specifically within the early stage investment ecosystem. And I know that for most of you who have been involved in this sector for many years, we have seen great stories. We have enjoyed a great exit, especially through the merger and acquisition pathways. And when we look at the data from 2019 until 2022 to 23, we see that there's been a little bit of a growth pattern that's pretty much kind of admirable. But starting from 2022, we're seeing that the numbers are starting to drop. And we know that in 2021, we recorded the highest number of mergers and acquisition deals on the continent. And it dropped a little bit by 2022, as well as 2023. And 2024 is still going, is still happening. The couple of deals that we have recorded so far, and about a few weeks ago, we were very much happy to celebrate the acquisition of Cricket by Ticketmaster in South Africa, which was a great celebration. And we hope that before the end of this year, we're going to celebrate more acquisition within the ecosystem. And of course, thanks to all the stakeholders that are contributing to really building the landscape and the field in order to make those deals as easy as possible. Now, moving on to the next slide, you will notice that fintech has been leading the show when it comes to merger and acquisition. And in 2023, the fintech sector was essentially leading the entire ecosystem with ahead of 33%, which represented a little bit over 29 acquisition within that sector. But we also saw the rise of artificial intelligence coming on board, and specifically with one of the biggest deal that we saw in Tunisia last year with Instatech, which was around $680 million. And of course, which was very much a significant deal. And we still hope that before the end of this year, we will be recording exciting deals within this space, and that specifically the angel investors who have contributed into some of these deals will be able to exit and pretty much create liquidity for themselves. So I must say that, to conclude, that the market has been quite dynamic, even though we have seen a little bit of changes over years. But we believe that from the highest record that we had in 2021, we believe that the market is responding well, even though things has gone down. Before the end of this year, we might be able to see some figures that would be encouraging. and the following years to come.
Thank you, Fadila, for that statistics that you have shared. And before we start our conversation, the main agenda of the session, I would like to know if you have exited from any of your investments. Would like to hear from you before we start this conversation. I know one of the things that before investors even make any kind of investment, they look at their chances of investing, and would like to know if you have said no. You can share more on the chat. Why are you still waiting for a chance to exit, or did your investment not make any kind of return? And if yes, how was the process, so that we can have this conversation going? And just to move forward, I would like now to call on the panel. We will be having Isaac, who is an angel investor with a very good chain of portfolio companies under him, and he has deep expertise in this field. And then we have Lelemba Phiri, we have Fadila, who will moderate, and we have Segun Cole. So I would like to call, and then on the speakers, and Fadila, please, you will be moderating the session.
Thank you once again, June, for having me lead this panel discussion. And it's a great honor to have all these great individuals who have shaped or contributed to shaping the early stage investment landscape on the continent. And it's a great honor having you today. Before we jump into the conversation, I would perhaps would like to ask all the panelists and to introduce themselves, starting with Isaac, followed by Lelemba, and then Segun.
Thanks, Fadila. Can you hear me clearly?
Perfect. We can hear you clearly.
Perfect. Yeah, thanks everyone for joining. Huge thanks to ABAN for organizing. My name is Isaac Ewaleifoh. I am originally from Nigeria, and I live and work in the US. I've been in the finance space for almost 2 decades now, across public accounting, investment banking, and now private equity. And more relevant to the conversation here, I started angel investing about 5 years ago, and then specifically on the continent 3 years ago. So thanks for having me.
Thank you so much, Isaac, for joining us.
Hi, everyone. Thanks to ABAN for the invite. I'm excited to be here. I'm from Zambia originally, but I'm based in Cape Town. I've been based in Cape Town for the last 17 years. We have a background in finance, started out working in government, then large corporate, and then was part of a startup that grew from 1 market to 5. And in that process, we created 5,000 jobs across our markets. We raised $30 million as entrepreneurs through Series A, B, and C. And then one of the things that really used to frustrate me was just how few women would be on the platforms whenever they would ask us to share about our success story. And so 6 years ago, I exited the business. I had a bit of money to start angel investing first. And so I started with angel investing and soon realized I wanted to do a little bit more, and then went into VC. So the first fund that I raised was a $10 million fund, funded by a family office from the US, and now currently raising a $50 million fund. We focus on investing in women-led businesses and teams with gender diversity as well. Yeah.
Thank you so much, Lelemba. So great to have you today. Segun?
Hi, everyone.
Hello.
Glad to be here. Then? Okay. Hi, everyone. Glad to be here. Thanks to ABAN for this great invitation. My name is Segun Cole, managing partner of On the Gap Alliance, which is a Pan-African network that addresses the issues of local founder underrepresentation in the allocation of venture capital. I'm also the founder of Masai. Masai is an M&A marketplace for Africa, enabling African startups to get acquired. Thank you.
Thank you so much, Segun. I'm happy to have you with us today. I would like to start with you, Lelemba. What are the key challenges facing African tech startup in accessing liquidity? You know, the same goes for angel investors as well, and securing exit. How have these challenges, in a sense, evolved over time, you know, over the past few years?
So when I was on the entrepreneurial side, this is 2011, 2012. I think at that point, trying to raise any amount of money was a huge challenge. You typically need a team member going to the US and, you know, taking time out of the business and fully fundraising. At some point, we had our CEO fully fundraising for about 9 months, traveling in the US and in the West. What has happened, I think, over the years since then, this is 10, 12 years, without giving away my age, is that we definitely have seen a lot of increased investment coming to Africa without us needing to travel out. The networks have become a lot more closer. We almost know who is who in the market and who is investing at what stage. And so from an overall ecosystem standpoint, things are so much better. During the pandemic, for example, we saw some breaking numbers in investments. We were hitting those $4 billion marks. Overall, we just happened to have a little bit of a dry spell between like last year coming into this year. But this is, I think, very normal for any ecosystem and for any cycle. And so, yeah. And so as a young ecosystem that is really just getting into the space, we are hitting some form of what I would say maturity. And so whilst it was an exciting 2021, 2020, there's a bit of a slowdown, but that doesn't mean that things have dried up. Yeah.
Oh, that's great. I like the comparison that you bring on board here. Lelemba, don't go. I have one more question for you. And I want to know, how do the liquidity constraint in African tech ecosystem compared to those in other emerging markets? And if those are unique factors contributing to this, if there are any unique factors contributing to these differences?
Yeah. I think that we do have one big difference. We have a lot of opportunity here because we've got a lot of problems to solve. And so with every problem that we have to solve, there's an absolutely massive opportunity. We're still developing markets, and so we still have to create so many solutions. So we seem to have more opportunity than we have money to solve it.
Right.
On the other side, they've got way more money and fewer, I would say, real problems to solve. You know, that's why you would find businesses like just an Instagram for cats will fundraise faster than a fintech in Africa, because the problems are less, the money is a little bit more. But with the world coming, you know, together a little bit more, technology helped. I think it's one of also the positives of the pandemic, if there is anything, is bridging this gap and making the world feel a lot more smaller. We still have the majority of investment that is getting into our space really still coming from the West. And this is both the US and Europe and Canada, and a lot of now excitement also coming from the East. And so our problems are different. We've definitely got more opportunity than we do have financing. And so it's really important from the entrepreneur standpoint that whatever we're bringing to the table has got something really unique and something extremely scalable to attract this limited amount of capital. Yeah.
Thank you so much, Lelemba, for this insight. I mean, if you're joining us today, please go ahead and ask your question using the chat box. I'm coming to you, Isaac. I know we actually met once for the first time this year, even though I've seen your name on multiple cap tables. And I will probably say that you're one of the most active angel investors on this continent, both supporting founders based on the continent and outside the continent. And I don't know if it's a secret or it was public, but I believe it was a secret, that I found out that you have enjoyed some exit over the years. So my question to you, Isaac, is this. Can you share some successful case studies or examples of your exit? And also, I would love to learn and to know the lessons that should be learned from these cases that you have experienced.
Okay, so thank you, Fadila, for the question, and I would say unashamedly, I invest very small checks, especially through syndicates. So yes, I am active, but again, like, I'm able to do that with small checks. In terms of like specific experience with an exit, I will talk through quickly an example of a founder that raised an early stage family and friend round. As they were getting the business started, they just launched their MVP actually at that time. And we invested with several other people. We actually had a clubhouse conversation and got some people excited about it. And a bunch of people, co-invested via a crowd platform. And we did that and using specific terms, that was at a 2.5 million valuation. And fortunately, the business grew, we got investor updates like every month. The business grew quite fast over a 4 to 5 months period and got fortunate to be accepted into a global accelerator. As part of a global accelerator, they got more visibility and that helped them going into demo day. They got interest and term sheets from a large US-based seed fund. As Lelemba said, there's still a lot of interest on the US side in Africa, and this was 2 years ago. So this was 2022. The slowdown hasn't really reached then, and at that time, the founder reached out and said, "Hey, there's an opportunity for early investors to exit." Now, in that particular case, it wasn't. There was no partial opportunity. It was like exit or do an exit, and there was some debates amongst folks if we should exit or if we shouldn't, because like there's big opportunities. And at that point, I've been fortunate to invest in several firms, and for me, I believe in diversification. And so my counsel to the group was, makes sense to take the exit. There's it's like you're the boss park, right? There will be another good boss that will come, right? Like going to that destination, and so now you can spread your returns across more opportunities and participate in that. So we did take the exit. That particular exit in that case was a 6x exit, which is decent for everyone that participated in it. When you think of it from like a startup return perspective, and that was within a year. And this particular startup actually went into Y Combinator. Now, when I look back now, because we have the benefit of hindsight, right? Like 2024, fintech has since slowed down globally, but more so even this particular startup actually raised some sort of extension recently, and I saw the deal come through AngelList, and the terms of the deal were actually about the same terms as the round that we did in 2022. So the valuation has sort of like stayed the same, like over the past 2 years. And in this case, it's actually, like fortunate for the startup because a lot of other fintechs have had valuation cuts significantly, right? Because the multiples are now different from way back then. And also exchange rate has affected significantly across Africa, but in particular Nigeria, where the startup operates. And so the lesson also that I share with folks from that is invest more in multiple startups and take exits often as they come, right? Because the bet at hand is definitely worth more than one that is out there from a distance. And that exit provides liquidity that helps keeps the ecosystem going, right? And then you can participate in like more deals. So I'll stop there.
Right. Thank you so much for this insight, Isaac. I'll come back to you with more questions. Masai, I think, is one of the most exciting past few months, and we really believe that through Masai you will actually you will be able to accelerate merger and acquisition deals across the continent by connecting with angel investors, but also VC stakeholders. So what I want to know, Segun, what strategy have proven successful in improving liquidity? An example to share with the audience today?
Yeah, thank you. So, Masai being an M&E, as you know, works with both parties. On one end, those that are looking to get acquired, right, or those that are looking to exit secondary. On the other end, right, you have those that are looking to acquire, and you have those that are looking to get into these companies that they would normally not have access to these deals if they don't belong to the top 1% where Isaac falls into. Right? So for us, it's been more of taking a much more proactive approach, right? By bringing these stakeholders together, right? We've been working with both parties for quite a long time, but it's been one of, if you look at the African market, there's a lot of stigma, right? Nobody wants to, there's this popular slogan that says, great companies are not sold, right? Great companies are bought. So no one wants to be the investor on the cap table of the company that's looking to get sold. Eventually, you might even get sold for peanuts, right? So for us, our strategy has been, how do we help you to get to that point where you are an acquisition ready business, right? Where you're prime to be acquired. So even if it goes back to even our messaging architecture for things like we help African startups find a new home, right? We help acquisition ready startups find a new home. Why not? This is not a platform for PT sales. This is not a platform where for failures in that regard. Things as basic as this, right? A lot of people don't pay attention to, and that's why sometimes it's very, very hard, because by the time you start coming from that messaging architecture where it's looking like you're looking for a handout, or you're looking for someone to save you, it's not attractive to anyone. I don't believe Isaac or Lelemba would ever want to acquire such a company from that. So we take it as far as as early as even from the messaging architecture, making sure that they are acquisition ready, right? And in that way, it helps attract the right people that they want to attract. We've also been doing a lot, investing a lot, even in the acquisition ready state, right? How many, take it for example for startups, how many startups even know when you should begin to look at things like acquisition, right? How many of them know it? How many startups actually have an idea or a clue when a startup should begin to explore acquisitions because they are approaching solvency? How many startups even understand what solvency basically means? Take a sample of 20 founders today in your portfolio company. Take a sample of 20 founders in any tech gathering and ask them, what's your plan B should you fail to raise capital? I tell you that in most cases, the entire room is going to be filled with tickets. So it's like they don't have any plan B. It's like we raise, and that's why a lot of them shut down at the end of the day, right? Because there was no plan B should we fail to raise capital, right? How many startups even have an understanding of what runway you have to have left, right? That you can even still pursue an acquisition, right? Because if imagine you have maybe two months of runway left, or a month of runway left, and you would see even those that have raised from global accelerator programs, they have 1 month of runway left, 2 months of, and that's when you don't have to say, oh, you know what, let's start thinking of acquisition. But they don't even have the capital, because there's a lot of things that have gone wrong in the whole stakeholder management. Now the investors are saying we want our money, merchants are saying we want our money, even the employees are saying pay us or we'll sue you. So it's chaotic. So it goes even from the even early stage of making sure that we call it M&A 101, right? Or secondary 101, making sure that they even understand what it takes to to begin that process. And in that way, we are very confident that we are able to get them to that stage where they are acquisition ready and they can find a new home.
Right. Thank you so much, Segun. I'm coming to you here, Lelemba. You're one gender lens investor. We're talking about liquidity, exit. Do we have an example of female exit so far?
Not that I can think of immediately. And this is interesting because we still have only about 4% of the investments that are going into tech startups, particularly going to female-led businesses. And if we look at the more gender diverse teams, we're still hovering at that 14 to 16%. And so it's still quite low.
Right.
And so I think that, our ecosystem being still early, we're definitely going to see more as we see more mergers and acquisitions, for example, as one of the key ways that people are exiting. And so it's a factor of both the fact that we don't have a lot of females reaching that stage of investment. We might have a lot more females being invested in, for example, at the angel stage. Then when it comes to the VC stage, a few more drop off. Then when it comes to series A, B, C, we're seeing that pot getting thinner and thinner and thinner. And these are questions that we've been tackling with as investors and as an ecosystem, and how do we do better? And so, look, our numbers are better than the global numbers, but they're still very dismal. And so we are yet to really see a fully female-owned or at least led business reaching exits. We still celebrate every exit that happens. But yeah, the numbers are still low. That's why we need more people investing with a gender lens. Yeah.
Thank you so much, Lelemba. And of course, with all the work that other women are also doing, like the Way Group and other female focus group working on as far as investment is concerned, we hope that we'll start seeing the fruit of their hard work. So this is a question to all our panelists. We've been deliberately talking about M&A, right? Merger and acquisition as the only pathway to exit on the continent. Do you also envision IPOs as an option? Please, you can spend 1 or 2 minutes to share your insight here.
I can go quickly. I think that it depends on the market. We have some markets that have got more liquid stock exchanges, like South Africa. That's very possible. And South Africa is not just the Johannesburg Stock Exchange, which is the main stock exchange. We've got some alternative ones as well that might be able to look at some of these businesses early. There's still a lot of alignment that is required to start to prepare our startups for those type of exits. But it's possible in the markets where there's liquidity, and this is not for all markets.
Thank you so much, Lelemba.
Yeah, I agree. And I'd say like, there's some intentionality, right, with IPOs or listing, right? Like, NASDAQ was not the home for technology startups by accident, right? There was intentionality. The NYSE, in New York Stock Exchange, had to change its rules to actually allow startups or tech companies with like dual share classes and super voting rights and like not profitable to list in order for them to actually compete in that space. And we saw rule changes in China, right, that allowed for the likes of Alibaba, for instance. When Alibaba was going public, was done in the US, right, because you just couldn't list in China, right, because the rules didn't facilitate that. So I think some of the exchanges on the continent needs to be, besides the liquidity where likes of like Joburg Exchange and others have, at least in Nigeria, for instance, like the rules probably need to be updated to facilitate and allow tech giants to potentially list, even if it's dual list, right, which could work, right? Like you could have Jumia that's in New York Stock Exchange now okay, dual list as well in Nigeria. Then that would encourage other people as to like that being a viable path for the future. But right now, I don't know if any of the large tech companies are even considering the option of listing locally on the continent, besides South Africa, where we've seen 1 or 2 tech companies successfully list there.
Right. Thank you. Segun, are you with us? Would you like to add?
Yes, ma'am.
Please. Go on.
They have both said it all. Just to add something to what is said, I was part of the team that drafted the first draft of the Nigerian Technology Board, getting the Nigerian startups to list on the Nigerian Stock Exchange, right? And we can clearly see whether the level of progress of that has been. So I'm hopeful, right? But currently, what is working is what we're going to be based on. Just to add to that again, I saw somebody in the comment section saying, why are we talking about exit, and why we're not talking about the early stage, right? It's also just very important to stress that if investors do not see a clear path to exit, then you might not even get an investment coming in back into the ecosystem. So every conversation is very, very important. This is a very, very, very important conversation that ABAN has brought up, and I believe we can have this conversation simultaneously. Another thing that we do at Masai also is just aside helping you get acquired, we also do things like asset sales. Speaking of early stage investment, we see that most of startups that fail are in the early stage, right? That early stage is seed stage is where you have a lot of graveyards of startups. But one of the things that we also do at Masai is asset sales, where you aside trying to get acquired, you might have a lot of assets, right? You have your IP, you have your office equipment, you have assets, right? You have POS terminals, you have things that you can get sold and return some liquidity back to your investors, right? So this is what we also help a lot of startups do, because at the end of the day, when they eventually even shut down, they shut down with just so many things that they could have, sold off and at least returned some money to the investors on their cap table. So it's not everything, acquisition. Even the assets can be, but that can be sold and still return some liquidity to your investors. Who knows? Maybe that's what your investors will see, and they will invest again in your next great idea.
Right. So this would be the perhaps the last question from my end. When we speak to angel investors, right? When we speak to angel investors regarding investing, although a lot of them have been investing and deploying capital across the continent. And when the VC comes on board, they don't want to let them out because they're actually leveraging on the presence of the early stage, let's say the angel investors, to actually support the company achieving the milestone. And so where do we go from here, right? What should be the ideal collaboration framework between angel investors and VCs? Angel investors wants to exit within 5 years, right? But the VCs that are coming on board immediately after the angel investors don't want to let them go because they're happy to actually have angels involved.
I think so. I guess it also depends on the stage that the VC is coming on. Our preference is to definitely consolidate as much as we can and allow for angels to be able to exit, because we are investing at seed stage, right? And then maybe do a follow-on at Series A. So some of my own angel investments, we've been able to do that at seed stage. I've done 18 angel investments with my syndicate group. 6 of those we've been able to exit at seed stage when a venture capital company has come on board. I think it's helpful if there's some really strategic angels, to still be able to have them on board. But I think this is an amazing opportunity at this stage to be able to have them get back some of that liquidity and invest in others as well. Because each stage of this growth path really requires a different level of skill set. It requires different type of support. And I guess in the cases where there might be hesitation by the VC, it's because they still see strategic value in what they can bring on board. But angels can still be able to negotiate some key milestones to say, what if we get to this place? Could we still consider exiting? I think being able to recycle that money is really critical for angels, yeah.
Right, absolutely. And it goes to the liquidity, the secondary market that we've been discussing, not necessarily on this platform, but across various angel investor platforms that we currently run. Please go ahead, Isaac.
So the other thing I'll add here, and the shameless plug for syndicates is, this is why it's very important to try as much as possible to do angel investing via syndicates. Because when you're in a group as a syndicate, then it's easy to have the conversation. Now, it may not even be the VC that is investing in the new round that you'd exit to, because the VC might say, like, I want my capital to go to work for the business, not like a secondary exit for anybody. But there might be other angels that are part of the syndicate that missed out in the early stages that want to participate. So it could be that syndicate, if they have a bigger community, then facilitates liquidity for those that came in the first round, right? And then gets a new set of people without impacting new capital that is coming. Because that's the concern that a lot of VCs have with, like, well, their capital coming in, they want to be deployed to the business versus like going out towards some sort of exit. And if angels, their syndicate, like, we have big angel syndicates on the continent now, between Oak, which was part of the last panel, you have Core Angels, you have Lofty Entrepreneur. There's several angel syndicates on the continent that have like large enough communities that can actually facilitate entry at different levels. And so within their community, they can create liquidity and facilitate that liquidity. I think we need more of that on the continent.
Thank you so much, Isaac. Segun, you want to jump on or move on?
Yeah, Isaac just picked it up on my list. But just to add to that as well is that the few cases, again, in fact, don't let me say few cases, because this is what I'm going through at the moment. You have a scenario where a VC is trying to put more money than the company is willing to take, right? So in rare cases, the VC is told to build up their stake by buying out these angel investors. And I mean, if you were to be on the other side of the table, that's Christmas for you. Or in situations where maybe, let's say, unaccredited friends and family cap table is quite messy, in order to avoid heightened disclosures, just okay, you know what, let's buy these guys out. Christmas again on the part of the angel investors. But anything other than that, is what Isaac said as well.
Thank you so much. Thank you so much. I would like to go back to the audience now, and it seems like there's been a live discussion on our chat box, but I would like to ask anyone who has a question to kindly raise their hand so that they can come up live to ask directly to the questions to our wonderful panelists. Yeah, and for those of you who are currently connected or who have registered, yes, you will receive the recording of this session. All right, as we await additional questions from the public, this will be my last question to the panelists. What are the future trends? I would like to know, in your opinion, what emerging trend or technology do you believe will pretty much impact liquidity or any exit strategies for our African ventures? in the next 5 to 10 years?
Gentlemen, I'll leave you guys to start with that one first.
Lelemba, I see what you're doing there. So I've flagged something that I saw recently. So in South Africa, there's the platform that just launched called Ions Exchange. And I saw it and I was like, well, this is interesting. It's basically a secondaries platform that allows like people to invest in deals, angels invest at like very low minimums. I think their minimum was like 500 rand. I saw them because they tagged like one of my portfolio companies on there. So of course, I was excited. I reached out to the founder. I'm like, hey, how does this work and stuff. I think the more institutional platforms or avenues there are for like inclusive participation in startup investing, as well as exits, right? So like Ions Exchange, I think there's like the family office that TVC so like back or part of, or Massa as a platform. Like as we see more of those platforms like pop up across the continent, that promotes more, just more interest, as well as avenues for people to like exit, whether it's through M&A or through secondaries or buyouts. I think that's going to stimulate and catalyze more participation because, to everyone's points prior, the fact that people have to lock in capital for a long time discourages folks from just investing, especially because of the exchange rate scenario on the continent and how uncertain things can be.
Right. Thank you so much, Isaac. Segun, you want to jump in?
Yeah, Isaac, thanks for the branding. So there's no day that goes by that we introduce ourselves as an M&A marketplace for Africa that you don't have an angel investor saying, look, I have like 10 portfolio companies, help us, like we want to get out, right? So the liquidity crunch is there. The long exit timeline is there as well. This trend continue to impact for as long as this exists. It's going to continue to have take its toll on this avenues. And again, that's why we believe that the timely intervention building platforms like this that help to facilitate these kinds of transactions, right? How just take, for example, even look at what happened with the Qatar platform, Qatar X, the Qatar X whole issue where they had to shut down their secondary platform just because of the misalignment. But the truth is, at the end of the day, investors wanted to get out, right? So we believe that as more and more people begin to look the way of platforms like Pasar,
right,
and this kind of platforms will continue to power this kinds of transactions, and everyone is happy.
So I also add just the wave of the increases in investors that we're seeing on the continent from angel networks. We're starting to see a lot more, for example, accelerators around just educating people on how to become angels. We're seeing a lot more accelerators at the VC stage as well on how to get into VC, how to raise a fund. The more of that type of investment activity we start to see in this space, the more pressure there will be on all of us to start creating this ecosystem of enabling one another to exit. So that trend on its own, as we see more local capital, local players getting into the space, there's pressure already from LPs to say we need to see more liquidity. And when it happens at VC stage, it happens at angel stage, and it cascades down. And so just the increased investor pool will create some pressure to be able to start to do more of these exits at all stages. Yeah.
Thank you so much, Lelemba. Thank you so much, Isaac. And thank you so much, Segun. You have really much set the background and the foundation under which this conversation around liquidity will continue until the end of the year or towards the African Early Stage Summit happening in November in Cape Town at the end of November. It was my greatest honor to actually host you today. And thanks to all the participants who have joined us today to listen to these experts, these movers and shakers that have been contributing to the early stage investment ecosystem on this continent. And on behalf of the ABAN board, on behalf of the ABAN team, I want to thank you very much for joining us today. And back to you, June. Lelemba, you want to say something?
I seem to have two people's hands up for a long time.
Yeah.
I don't know if there
We did?
were questions in the...
I did not see the hands. All right. Apologies.
We'll start with Lindo Hule.
Greetings, everyone. Good afternoon. Just this afternoon here. My name is Lindo Hule. Lindo, you can call me Lindo. Lindo Dlamini from Eswatini, in the southern parts of Africa, close to, I would say, just right in the middle of South Africa and Mozambique. So I'm a startup founder. I would say it's still at an early stage. And I understand here you already dropping big terms, the majors, investments, investor capitals, angel investors. I'm just trying to make it out here, and I see that with ABAN, I'm with the right network, I want to believe. Just for the purpose of this session, I'm not sure if we can maybe have contacts of the different panelists whom we had. I am following ABAN at least on their social media platform, Twitter or X. So I'm just hoping I'll be learning a lot. So that's just a little request. And just for mentorship as well, because I'm currently part of a new initiative which was launched by UNDP Nigeria just this month. It's called Timbuktu FinTech Startup Accelerator Program. So we are undergoing training there, of which it might also spell to non-equity funding at the end of the day. That's if they do consider my startup. But just to make sure I'm on the right line, I'm looking for mentors here. I do want to believe that I can count on this network as a resource for my startup. Thank you.
Okay, thank you.
Thank you so much for coming on board and expressing your need for support, but also congratulations of being part of the first cohort of the Timbuktu FinTech, I believe, FinTech cohort, right? What we're going to do.
Thank you so much. Thank you.
Before the angel investors, as well as fund managers on the call jump in, we're going to share the ABAN Secretariat email address, and you can just send us a hi, and we're definitely going to address your need. We'll make sure that we provide as much support as possible, and we're looking forward to collaborating or discussing with you. All right.
Okay, we'll go to Stefan.
Yeah, good afternoon, everyone. I'll be brief because I think we're heading towards the end of the chat. Thank you very much for the panelists. It was very enlightening. Briefly, my name is Stefan Iboko. I am the managing partner of the Growth Fund focused on Africa and people from African descent. So, put simply, you might be raising a Series A in Nigeria, talk to us. You might be raising a Series C, you're in the UK, but you're from Kenyan origins, talk to us. Briefly, Lindo, if you wanna be in touch with the program, you can find me Stefan Iboko on LinkedIn. The one-on-one capital partners, because we like the basics. The basics of business is optimize your costs and grow your revenue. I think a lot of people have forgotten that. So that's just my comments. But the basics of angel investment is not, if you were enter angel investment, because I was an angel investor as well. If you enter angel investing as this, just your exiting, please, go invest in ECFs and do something else, because the problem is not capital. For early stage, the problem is not capital and access to capital. The problem is access to the right networks, the strategic investors, the sales guys, those kind of things, right? So in order to grow, in order to basically set the track for growth. So I'm a bit confused with all those
I just want to, Stefan, please.
about
I want to clarify.
Yeah. No, I just
one
want
minute.
to understand.
Just 1 minute.
Either
just 1 minute.
Because I asked the question in
just
the
1
chat,
minute.
But,
That's exactly where we need to go to. Do you have a question or you're making comments? Is that a question? Stefan? Hello, Stefan. Can you hear us? Hello?
Stefan, you're mute if you're speaking.
No, I'm sorry, but I was muted, so thank you very much.
Can you go straight to your question, please?
Yeah, I was muted, so somebody muted me, so thank you very much. I'm going to leave. Thanks.
All right. Okay. Please kindly go straight to your question. Stefan is on mute again.
Okay, we'll go to Victoria.
Yeah.
Please,
Victoria, please.
Hi, everyone. Thank you so much for taking the time to speak today. So I hope to follow in the same footsteps as Lelemba and Start to Fund as well. And so my question kind of links to that. You mentioned an interesting point where you spoke about the fact that there's so much opportunities in Africa, so little finances. So when you go about deciding which companies that you want to invest in, this is for the whole panel, what are some of the factors that you're looking at outside of standard metrics, like looking for your product market fit, your the ability to scale, making sure that this is a good and solid team? How do you make sure in a country that has so many opportunities where people are really trying with limited finances, how are you, like, what are the deciding factors with where you put your money?
I think having a clear strategy as a fund is important, because otherwise you're going to have a more spread and pray approach. So having a clear strategy of, sometimes it might be limiting yourself to the sector that you feel you can add the best value in. Sometimes it is, for us, for example, it's first looking at companies from a gender lens and then doing the whole analysis downwards. We have 3 key sectors that we look at because that's where we've got our most experience and networks and strengths. We have key regions where we look at because that's where we have our strongest networks. Things like that help you to hone down on the opportunity. Otherwise, you stretch yourself thin. But also really, I feel like with investing in any business, you're doing 2 things. You are investing in the driver and you're investing in the car. And sometimes the car can be beautiful and shiny, but if you don't have a great driver, it still won't perform at its top. So really the qualities of the founders, that resilience, that teachability. This is not an easy market. Entrepreneurship overall is not for everybody. And so really seeing those qualities which you feel will stand the test of time, up and down, when there's good news and when there's bad news, is important.
Okay, I don't know if anyone else has a question. Okay, Segun, please go ahead.
Okay, so let me go before Isaac this time. We've been having this eye contact of you go first, I go first. So Lelemba has said it. At the end of the day, we've seen so many situations where you have founders that would take your thesis, they will take your criteria. If you even have a core approach, they'll take it. But at the end of the day, looking back, you just want to cry like, I can't believe this happened. So the risks are there, these things will always happen. But for me, it always starts with the why, right? Why the founders? You said it. Why this problem, right? Why now? Why do you think you are best positioned to do this? And in just listening to them, as much as you're dealing with a startup, right? In the product sense, even the fund as well is kind of like a startup, because at the end of the day, they're trying to build this product, they're trying to invest in it and make it work. So as long as there's that alignment, I believe these are things to look out for. At the end of the day, there's actually nothing you can do in cases where things are just bent out to go haywire. But as long as you're true to your intentions, you're true to your motives, right? I think even if you're going to write that investment off at the end of the day, you're still true to who you are and what you believe.
Thank you so much, Segun. We are more and more interconnected, angel investors, VCs, and other key stakeholders that are really enabling the whole ecosystem to actually function, like Masai with the M&A platform that it offers to the angel investors as well as the founders. Once again, thank you so much. And I don't know if anyone has anything else to add. And if not, I think we're ready to move to the next session, which is about the announcement. A poll. Thank you so much. Bye-bye.
We're taking a poll. I can see one last person will take just one question from Maimbolwa, and then now we can move to the announcement. Maimbolwa, please.
Okay, thank you very much for the opportunity. My question, I wanted to find out from Lelemba. I'm coming from Zambia. I'm in the agribusiness space. I've noticed that most of you are focusing on tech. Do you have any opportunities of investing in the agribusiness space as well?
Absolutely.
Thank you.
Absolutely. So we invest in 3 key sectors. We invest in technology and tech-enabled, we invest in climate, and then we invest in value-added agriculture and fast-moving consumer goods. And so, yes, I think it matters for you as an entrepreneur, as you're looking for investors, to first really look for the ones that are in your space, so that when you're contacting them, at least you know what they already invest in. And then different businesses will need different types of financing, right? So not everybody might be a good fit for, your typical venture capitalist that might be looking for 100 times return over this amount of time. But there are other type of investors as well. There are other type of investors who are just focused on SME businesses, will understand your business better, and will know what it is that you need. And so we do both. But as you look, please just make sure that you are looking into the right type of investor for what you need.
Yeah, I'll quickly add there and say, you said you're from Zambia. I actually have an ag tech in Zambia that I angel invested in. A company presented to ABAN last year as part of the Climate Smart Agricultural Court. It's called Harvest by a gentleman named Chris Chilesi. But yes, I mean, to Lelemba's point, there are a lot of thematic angel groups, or just broadly folks that invest in agriculture. So agriculture is a huge space on the continent, and there are several investors.
Okay, that was a good and insightful session. We've had from a perspective from an entrepreneurial sector, M&A, and what we've also seen from an angel investment position. So we have ended this conversation knowing how best to position ourselves as angel investors and also as entrepreneurs on how we can unlock exits in this ecosystem from an early stage perspective. And as we end this evening, I would like to thank you for joining us. I would like to thank our panelists for that insightful discussion. I'd like to thank Fadila for moderating the session, and also for our participants, and even for sharing your questions and interacting with us. Please feel free to share an email with us on our secretariat email address that we've shared. And also don't be shy to follow us on our social media platforms. And just a final touch up is we have launched our 2024 Angel Investment Survey. which will be launching it. We'll be publicizing it in November at ACES. And before then, your duty is to take the survey. We would like to hear your insights. I would like to, we have in the survey, it goes in depth for these masterclasses that we have been having. We want to hear your response. So please feel free to take it. You can scan the QR code. And also we've shared on our chat a link where it can take you to take the survey report. Always reach out to us so to further this conversation on our email and also on our socials. Please feel free to interact with us. Until next time, bye from our end.